Okay, good morning. Welcome back. It's Wednesday. It's CPI day. And before I get into the market's reaction on CPI that was announced at 8:30 this morning, right now it's 9:14 Eastern Time. I have a little update from my yesterday's video. Yesterday I posted a video where I took two losing trades. Now, if you've been following my channel and the way I trade, one of my rules is three losing trades in a row, and I quit for the day. Now, yesterday I quit after two because we had CPI coming up, and it didn't look like the market was doing anything. And if you look at the chart, if you look at the chart here, this is the 1 minute chart. So I had taken a trade at 10:28, which was right here. I got stopped out for a loss at 10:44, and then I took a trade at 11:03, which is 11:03 was around here, right? And I got stopped out at 11:05. But then later in the day, um, after I took these two losing trades, I was just hanging around the house doing a little guitar, and then I came back into the market at 246. So that would be on here. That would be 1446, which was right about here. And the reason I took this trade is because the market came back above this price level of which was 601 on the SPY, and it was yesterday's high on the SPY futures, which was right here, 60.27, which was yesterday's high. So I saw the market come back up here. Let me go back to the SPY, and so I took a trade. So we broke that yesterday's high. Sorry, Monday's high, and retested it. So I went long on 10 calls at 274, and then I got out at 307. So I will show you. I will show you my. That's that last trade. Here's the last trade I bought to open 10 of the 603 SPY calls at $2.74, and then sold them 9 minutes later for 307, and that was a profit of 316. So I kind of battled back, and so I ended up losing just $9.75 for the day. So that was a nice trade, although I left a lot on the table here. And what I want to do is, let me see. Okay, so here's a chart of the 603 calls that I took yesterday. So I entered my final trade at 1446, which was right here. Just as and it even the option, the calls crossed over the 9 EMA. So I got in at 274, which was right here, and I got out at 307, which was right here. And unfortunately, I left all this on the table all the way up to 385. So had I let this run, I had 10 calls. I could have just liquidated 5 and let 5 run. or liquidated 7 and let 3 run. But had I let all 10 run, um, 10 calls, that would have been $1.11 profit on 10 calls, would have been $1,100 in. So 1506 from 1446. Yeah, you're talking 20 minutes. Not bad, risking $2,700. Well, not really 2,700. That was the total I had in on the trade. I'm never risking 100% of my trade. But, a $2,700 trade to come back and make $1,100. So that's one of the things I still have to work on is letting my trades run. But the problem is, so I was down the first two trades I took losses, so I was down $326 on the first two trades. And the psychological thing that happens to you, I'm taking this last trade late in the session. I see myself, oh, I got back my losses. Let me get out and just end the day flat. This trade rescued me from having a losing day. And that's kind of the psychology that gets played in your mind when you're trading. So you really have to try and get past that. And a trader with a lot more experience than me would have stayed in this trade. Or at least they would have maybe gotten out of 5 calls, right, at 307, which was here. And then maybe another 3 more calls they would have got out over here, and let 2 runners go, and then maybe set a trailing stop. Of experience and screen time, that and my not handling the emotions of trading yet, that is getting me to get out of the trade once I made back what I lost on the first two trades. It's that psychology. Now, the one thing that I've really done well with, and I think I've gotten over the hump of my trading, is keeping to my stop losses. That I got a good handle on. But the emotional aspect of trading, I still have a long, long way to go. All right, so we'll see what happens today. So let me go back to okay, so right here at 8:30, we had CPI came out. Let me see what the news was on CPI. Increased 2.4% from a year earlier. Okay, so that pushed the market up, but then it gave a lot of it back right at the pre-market here. So we'll see. We'll see what transpires when the market opens. For me, I wait to the first 20 or 30 minutes. If you've been on this channel a while, you already know that. So I'm going to reset my pre-market highs, pre-market lows, yesterday high, yesterday low. And the one thing I can point out right now is this Friday high right here. The market has been staying above it ever since Tuesday. So this was the market high on Friday right here. And the market came above that, retested it, and it stayed above it, retested it again in the pre-market today. And we're above it. So we'll see what happens today. I'll readjust my levels and get back to you after the market's been open for a while and see if I have a setup. I'll come up with the plan for today. So all right. So happy Wednesday. Do me a favor, hit that like button. It's all I ask. I come here every day. I risk my money so that you can learn and I can learn. Subscribe to the channel. I'll see you in a little bit. Okay, we looks like we're staying above yesterday's high. We have possibly two green candles above the 9 EMA, so I think I'm going to get ready to buy some calls on the S&P. I think I'd like to see a stronger break and retest at this yesterday high at 60.49 before I take a trade. Yeah, it's still early in the market open. I don't want to get trigger happy. I could see this level is kind of balanced right now in the market. I'm thinking maybe I'd like to see the pre-market low or yesterday's low get tested and hold. I'm going to be a little bit more patient. I don't want to get trigger happy and start taking trades because it's. I think my instincts were a little bit are a little bit better now, and as I mentioned earlier, I think I got a great handle on sticking to my stop losses, keeping my losses small now, and I think the next thing I want to work on is patience. And I showed that this week, I think, and I want to keep practicing patience on this market. There's no reason for me to jump in so early. I would much rather see this pre-market low. This pre-market low right here, it's 60.21, and this yesterday low of 60.15. I'd like to see them get tested before taking a trade. We had this aftermarket from yesterday rejection of yesterday's high. We got above that today early. Now, some new traders would say, "Oh, it's going to go to the pre-market high," and start chasing this. And sometimes you're going to be right, and you're going to get a nice push and make some money. But I'm not going to do that because I'm a little bit more experienced than that, and I know that chasing a move is not the proper thing to do. We're in the middle of a pre-market high and a yesterday high, and I don't want to be taking trades in the middle of this. I would rather play the levels, and you're starting to learn now is that the levels matter a great deal. Um, so I didn't take any trades today. I got busy with some landscaping work outside with my friend Rob. Kudos to my buddy Rob for coming out today and helping me. So I wanted to go over a few things. So I mentioned earlier in this video about how I went back into my account late yesterday after two losing trades where I was down a little over 300, and I took a winning trade, which ended up getting me back to where I was only down a little under $10 for the day. So I had that third trade yesterday that helped me be essentially flat. So today, I set up my levels, the pre-market high here, the yesterday high here, and so early on, I mentioned in this video how the market reclaimed this yesterday high, but I I didn't want to chase this. I didn't want to succumb to FOMO, fear of missing out, by chasing this, hoping that it'll go up to the pre-market high. I think a more inexperienced trader would have bought here, thinking that it's didn't definitely go to the pre-market high because it was just there. And then what you're doing is you're taking a trade in the middle of this these two levels, the yesterday high and the pre-market high, and you're chasing this upside. I didn't want to do that. I think my experience in trading now has kept me out of that trade, and it worked out beautifully because the people who were chasing this high got burned, as you can see. So then the market came back down. It tested yesterday's high and rejected it, tested it again, rejected it, and then got above it, and then fell below it again. So today was kind of funky after CPI data came out at 8:30 this morning. So this was kind of a little bit bizarre trading today, and so still the market closed above its yesterday low. So it looks like the trend is still um, on the upside, still bullish, but I'm glad that I didn't get sucked into this trade today. I feel good about that, even though I didn't take a trade. But I may have taken a trade if I was in front of my computer. But I had to get some landscaping work done with a friend of mine. But I think the lesson for today's video is what I mentioned earlier about how my emotions, because I had taken two trades earlier yesterday and was down a little over 300, and then I got back about $300 on the third trade, that my emotions kicked in, and that as soon as I got back that 300 bucks, I closed the trade out. And I had left, if we want to look at yesterday's chart, I ended up leaving. So I kind of got in right here and got out right here, but I left all this upside in it. I really had no reason to get out of this trade, and yet I did, because once it got to here, once the market got to here, and I was up about a little over $300, and I made back the losses I had on the first two earlier trades yesterday. My emotions kicked in. My brain said, close it out. You got back to even. Get out of it. But I really, because of my inexperience, I know that a better trader with more experience would have stayed in this trade, or at least maybe got out 5 calls. So that's really the lesson that needs to be learned for me. And maybe you'll learn that lesson too, because I'll tell you right now, trading is nothing more than having screen time and learning lessons. And no matter how many years you trade, you are going to continue to learn lessons if you analyze your trades at the end of the day. Right? You just don't want to trade, shut down your computer, and then go watch TV. You want to analyze your trades. And maybe you might want to wait for Saturday and Sunday to analyze your trades for the week. But whenever you do it, you need to analyze your trades and see what you could have done better. And for me, I really, once I was even for the day here, I should at least maybe just closed 5 trades and let the other 5 run. So really, that's the lesson for today. Getting control of the emotions, seeing that there was no reason for me to get out of this trade with the volume that was taking place on this upside. Um, yeah, there's just no reason I should have gotten out of this trade. So that's it for today. I'll be back tomorrow. Hit the like button, subscribe to the channel, and I'll see you tomorrow.